Good morning, traders. This is Frank Cholly with RJO Futures in Chicago, coming to you on Tuesday morning, March 5th, with your grain market morning commentary. Currently, grains are trading a little higher across the board. Corn is 1 to 2 better. Wheat's also about 1 to 2 better, and the soybeans 12 to 13 better. Now, this Friday we have a crop report. It's the monthly report. Normally, not a very big one, especially in light of what we have coming up at the end of the month. On March 28th, we have the big quarterly grain stocks report, and we have the big planting intentions. So whatever happens Friday, probably no big surprises, but whatever it is, it'll quickly be forgotten, and we'll start to focus on the report coming ahead. So planting season's right around the corner now. So we're going to start to talk a lot about how many acres, and of course we're going to focus on the weather. Whether the farmer's going to be able to get out there, get the work done early, or are we going to have some sort of delays? We know we're going to plant a lot of acres. Now it's up to Mother Nature to cooperate. So we'll see how things go as we get through the month and into early April. Wheat prices down pretty hard yesterday. Weekly export inspections were rather disappointing, and we need some demand to spark a short covering rally here. We have a big short position here by the funds. They continue to add and press the wheat lower. We see wheat and corn trading about the same price. In the May contract, we saw corn trade a premium to wheat yesterday. So let's keep an eye on that spread. That's a very interesting trade shaping up there. As I said, right now the most bullish thing about the wheat is the fact that there's just so much bearish sentiment right now in a big short position there. So once that starts to cover, this market can have a big move up. Soybean demand needs to slow. Soybeans trade a big dollar-wide range here, $14 on the low end, $15 on the high end. And at some point, as I said, I would expect that soybean prices will have to trade above $15 to ration demand. That's the best and easiest way to slow down that demand. At some point, logistics start to move more smoothly out of South America, and we'll see the demand for soybeans shift from North America to South America. But in the meantime, China keeps coming to the U.S. for beans. That keeps the price up. Technicals look pretty good, so soybeans kind of lead the way higher right now. Corn, on the other hand, likes hanging around this $7 range. We're going to have to wait and see again how things develop. We don't really have the demand side story there, but we have a very tight supply, and as we see diminishing demand, obviously the carryover to stocks that we have build a little bit, but until new crop comes, there's really no good way to rebuild those stocks. So corn's going to hold steady, I would say anywhere around 720. Look for resistance to come in May contract 710 to 712 in the corn. 718 to 722 is kind of a key level. If we could close above that 720 level, then maybe we get a little bit more momentum to the upside. Support in the corn right around $7, $6.98 area, and then $6.92. If we penetrate that level on the way down, things start to get a little more bearish again. That would be damaging technicals. In the soybeans, $14.75 or so, right where we are now. This is kind of a key level. If we could at least close around here, keep it above $14.70 on a closing basis, the market gets more friendly technically. $14.90 to $15 kind of a key level with the soybeans still. And of course, on the downside, support comes in around $14.45, $14.40 areas. That should hold. May wheat, it seems like a long way off because we had such a sell-off yesterday, but the first level of resistance comes in around 725, 742 and above on a closing basis. The market starts to get technically bullish, and again, we could be there in a hurry with the size of the short position we have. Support seems to be pretty good, just below $7, $6.97, $6.98 so far. You know, we bounced off that level a couple times, and then below that, $6.75. So that's all I have time for now. Please feel free to give me a call. Number's 800-826-4124. And as always, remember that trading commodity futures does involve substantial risk of loss and is not suitable for everyone. Thank you.